All right, welcome to ElectronFX, and this was a promised video, and it's actually a 3-day series. Right, we will be unraveling the mysteries behind why certain things in the market are the way they are. All right, so this is the diary of the sniper trader, page 1. We'll be sharing page 2 and page 3. Right, this is a series in which we'll be sharing some hacks or some things that you would never find on certain YouTube pages, on certain Google search engines. You'll never find on BP Pips, right? All right, so this is it. We want to understand why is it that support and resistance don't work, right? So those are three: support and resistance. You'll find out that there are times that you would see a good setup at the support and wondering, wow, this support held for how many times, but why didn't it work? Right? Look at this chart now. So you can see that, look at this. So how would you have played this? This is actually a support. If you call this a support, look at what the market did. The market kind of tapped here, and then it went up, and then it kind of came down a bit. So imagine you took your sell maybe around this point here, took your sell around there, right? You would have been thinking that, okay, let me place my stop loss below this. Look what the market would have stopped you out. But let's assume that you took you took the sell around there. Look at this again. You would have still been stopped. Look at this week. This week intentionally went below your enter and you would have been stopped out, right? You can see how this week came below, right? Let me make that closer so you will see this clearly. I want you to understand why support and resistance don't work. I just want to use live examples to show you this thing, right? So look at this. Imagine you enter your buy here. Look at you have still been stopped out, right? So this is it. It is a very, very painful thing, right? To keep getting stopped out of trades when you don't even understand what's going on. Look at this. If you imagine you took your buy here, right? You took your buy trade at this point. What happened? The market intentionally did this. Why couldn't the market just reject from here? It had to go all the way down. This is how many pips from here. This is about 946, and this is about 924. This was about 22,000 points. That was what the market just did. You had to take out the buyers and then the sellers. I mean, yes, the buyers, but particularly. So this is it. It has a very confusing concept. Look at this resistance now. Look what happened. Imagine you sold around there, and maybe you sold around there. Look at the market would have wicked you out and then still sold down, and then it is very confusing, right? It is a very confusing trading support and resistance. These things do not work. They do not work. Right? Imagine you put your own sell here. Look what the market would have done. Have you seen how this is how it has been playing? Look at this whole buy move, took out all these highs before selling down. So I want to share why support and resistance don't work and why I don't trade. And those of us at the mentorship at ElectronFX, we don't trade support and resistance. These are the several reasons why we don't do that, right? And let's start with the first reason. The first reason is that the market's very nature, right? The market structure, the very nature of the market structure goes against support and resistance, right? The first reason why it doesn't work is the market very nature, right? The market's very nature. That is why support and resistance don't work. The market very nature, right? So this is the first reason. What do I mean by the very nature of the market, right? Basically, unless the market is ranging, right? Basically, we have two kinds of trends. The first trend is the bullish trend and the bearish trend. So in a bullish trend, this market doing something like this. So that's what the market will be doing in a bullish trend, right? So this is what to expect in a bullish market. A series of higher highs, higher lows. So you can add this here. I put uptrend, right? So you can see that this is an uptrend. This is what an uptrend look like. And now I will still do for a downtrend, right? Let me just do for a downtrend at once. So I want to. Right, this is what the downtrend looks like. The market trending downwards. The market looks like this. Right, sorry if it doesn't look so perfect. Right, so make it a little bit better. Right, so let's clone this and put it at the right side. So this is downtrend now. It's a downtrend. So now, what do I mean by the very nature of the market, right? This is the very nature of the market. So this is for an uptrend now. In an uptrend, the market forms what we call higher highs and higher lows. So you can call this a higher high, this point is there. And then bring up my arrow to so you see this clearly in case you're not seeing my arrow to. So you can call this your higher high, and this your higher high, and then this your higher low, your higher high, your higher low, and then the higher high. Then market will give you a series of higher, your higher high, your higher low, your higher high, your higher low, your higher high, your higher low, and then your higher high, right? So this is the first reason market does not respect support and resistance. So imagine that you drew something like a resistance here. Look at what would have happened. You would have been stopped out, right? Resistance, double top, stopped you out. You came again, you drew another one here. So resistance stopped you out. So that is it. This is the support and resistance is actually against the very nature of the market. All right, it's actually against the very nature of the market, unless we have a consolidation market, right? Like in this case, the way we had a kind of range, right? So if you are I don't know if you had a range here, or something like a range, right? Look at this point, you had a kind of range here. So imagine if you like trading a range, that's okay. Resistance support, you'd have been buying and selling in between this range, and usually market always breaks ranges. I look at this, you have been buying, you'd have let's see just clearly. You would have bought here, sold here, bought here, but the thing would have still been weak here. Look at all these weeks. Look at all these weeks, right? You would have still been stopped at regardless. Imagine you sold here, market actually went above this place and still sold down. Can you just see how these things are very confusing? So that is the first thing, that the market's very nature does not support uptrend and downtrends, right? I mean, it does not support resistance and support, right? That is the first thing, first and foremost thing, right? It's against the market's nature, right? So in the case of a downtrend, you should expect the same thing, right? The market very nature does not even support it. Look at this is downtrend now. Ideally should not go below here. So look at, if you imagine you do something like a support here, some market would have stopped it out. If you came out, you drew another support. Sometimes the market can actually do something very funny, right? So the market to just go break through. The market will do something like this, you know. Sometimes the market will do something like this, right? Where's my this? Market may even do this, you know, kind of do something like this to give them that hope of buying, and then look at the market will do something like this. So these things happen. It happens. So if you maybe you saw this resistance reject 2-3 times, you'd have still been stopped out of this market. So you must always understand that the market makes what we call higher highs and higher lows, and it is always trending, right? Unless maybe you're consolidating or accumulating or redistributing, right? So this is a very against the market nature. This is a very against the market support and resistance. The nature is actually against the trend. I mean the resistance and the support, right? The very nature of the market is against your support and against your resistance. That's why you should never trade support and resistance alone. The only time that you can trade support and resistance is when maybe you have established that the market was an uptrend. This is an uptrend now, and now you have seen the market reject around there for the first time. Where the market is going upward relatively, this is an uptrend now. Maybe you drew something, you saw something here. This only time you can trade the support and resistance. Maybe it aligns with your structure, right? You come here from a higher low and then you continue going, all right? At times the market does not just from your higher low above, right? It may not necessarily come here. It's going to give you 100% retracement to your entry here and then buy all the way up. So this is the only time I should trade support and resistance. You should never do the reversal parts. You should never trade double. You should not be trading this. Yeah, this is the only way you should be doing it for an uptrend. If you must trade support and resistance, then it needs to be in line with the trend of the market, right? For example, we have a bearish trend, right? If you must trade support and resistance, it must be in line with the trend. But I don't trade support and resistance, and those of us as ElectronFX mentorship, we don't do that, right? Because we have seen this thing and we have found out that it's not profitable, right? It's not profitable. So imagine you're a seller, you cannot simply do this, right? Those few times the market gives 100% retracement, but it's not all the time. It doesn't happen all the time, right? Market usually want to weak out and take out sellers, buyers which are trading at those parts of the market, right? Now, let's look at the next reason why it doesn't work. The second reason why it does support and resistance does not work is that we have what we call the smart money traders involved, right? We have what we call the involvement of smart money traders. That is the second reason it doesn't work. The second reason why it doesn't work, right? And the involvement of smart money traders. What do I mean by this? Now, for the market to move, right? For this market, right? Let me bring out the chart. For this market to move from here to here, it means that someone, look at this buy move here. Can you see how impulsive this buy move was? So for this market to move all this distance, simply means that there was someone willing to buy, right? The market moves on the basis of orders, right? The market moves on the basis of orders. These orders that make the market to move. Orders, right? So for the market to buy from that point to that point, it means that someone was willing to buy the market from here to here, right? So now what is the importance of this to us, knowing that the market moves by orders, right? Now, imagine that we are trying to catch a sell at a resistance, right? Right, right. So you are looking at taking a sell here, and maybe this was a kind of daily resistance or something like that. Look at this. We're trying to catch a resistance here. All right, and the markets kind of gave that little rejection and maybe saw an engulfing candle. I don't know if you have noticed this. There are times that the markets will give an engulfing candle, even give a doji and still go and buy above resistance. And sometimes the market may even give you this, you see some kind of very clear doji, you see a clear doji, the kind of rejection, and the markets will still do this, right? Now, what is the point of this? There are what we call the smart money traders, and these are traders that actually control the markets. They are the traders that have the money. For instance, we have the banks, we have the hedge funds, we have the institutions, right? All these hedge funds, all these big companies that control the market, right? They are companies with a lot of money, and they're the ones that control the market, right? They're the ones that control the market. So, and now these guys, they are actually in a journey, or let's say in a race, to take out retail traders, right? You know, whenever you click on a buy button, right? Imagine you click a buy button, right? It means you always see something like order filled, something like that. So for your order to be filled, it means that someone somewhere in the world was actually selling the market, right? So for your buy order to be filled, someone has to sell. Imagine this is called trading, right? You're buying for someone to sell, right? Just like your local market, when you buy maybe a cube of sugar and you want to sell it, you must find a seller. So what the market does is that it helps you to find sellers. That means whenever you click a buy button, that means somewhere in the world has a sell order, right? So that is basically it. And now these guys, they have a lot of money, and for their buy orders to be filled, there has to be someone selling, right? And there's no way you can make someone to sell at a resistance. It's not possible. So what they do is that they intentionally buy, right? Instead of them to sell here, they first of all buy before selling. This is what we call the theory of mitigation, right? So for them to actually sell at this point, they have to buy first, and when they buy first, they take out your stop loss, and then when you have taken out stop loss. You know that whenever you click on the buy button, you have actually sold in the reverse. So when your stop loss is hit, right? Whenever your stop loss is hit, it means that you have sold, right? For them to force you to sell at this point, they have to make your stop loss to get hit, right? Whenever you close your trading loss, that means you actually sold at the resistance. So they'll have to force you to sell here. And the only way they can force you to sell here, I mean, they want to force you to buy here, right? To look at they can force you to buy here is to take your stop loss, because whenever you take a trade, when your stop loss is hit, the reverse happen. Whenever you make a profit, the reverse happens as well. So if you're buying and your stop loss gets hit, that means you actually sold, right? If you're selling and your stop loss gets hit, you actually bought. So that is the reverse. So whenever you want to make it to buy it so that the orders can be filled, because if everyone keeps selling, then their big orders are not going to be filled. Remember that for a buy order to be filled, there has to be a sell order. So for the sell orders to be filled, they have to buy here and make you to buy too. So whenever when everyone around the world have clicked the buy, right, using their stop loss, by their stop loss getting hit, the orders get filled, and then they can also sell and manipulate price down. So this is it. They manipulate the prices to the direction of their choosing, because they have the money to do that. So the market is controlled by orders. So since everyone is selling here, they cannot have the people have open sell orders here, meaning that they can buy. So when they buy, they use their buy to close all those sell orders and inversely make those people to do what? To buy, right? And then they cannot push price down, right? You always see this happen in the market all the time. I think I showed you some examples of that. You will see this thing happen all the time. Look at this now. Look at this example I showed you. They were trying to look at this one: first rejection, second rejection, third rejection. Look at this happen. This intentionally bought. It intentionally bought, right? It went against everyone trying to sell it, and then look, after it finished by, it still crashed. How many pips? It crashed from 124K to 960. That is, it crashed more than 60,000 points. Right, this is it. That's what we call the involvement of smart money traders, forcing you to take if they want to force you to buy it. Nobody want to buy it, but they can force you to buy it by making a stop loss to get it. So they intentionally buy against retail traders, because they already know, believe me, they know the support, they know resistance, they know all those things that you know, right? They use this information to your disadvantage, right? So my very advice is that you should stop trading support and resistance. Stop trading double tops, double bottoms. Look out for making entries at a higher low. That's market is buying. Look at entering at the higher lows. This is the safest way to trade. Right? This is the safest way to trade. Trade structurally. Market is making higher highs. You're buying here. You're buying here. You're buying here. The market is selling. You're selling at the lower highs. And then when you have your break of structure, you trade structurally. Right? This guy is a trade with structure. So the market eventually comes and clears structure. Right? If you have not watched my video market structure, please go and watch it. I cannot start explaining all this over again. So look at this. So we have a break of structure now. Right? What happens when the market is able to take out the previous higher low. Yes, the previous higher low. That's a break of structure on the bullish market, right? So now we have a BOS. We're not looking at selling, right? If I look at selling, can I take the last supply zone before the BOS? Right? This will be your last supply zone. This point here. At this point, you cannot take a sell here and then take price down. So you must always trade with structure. Your entries, your support, your resistance should only matter if it is in line with the structure of the market. I hope this helps you. I just want to share just 2 reasons why the support and resistance does work, right? And now let me just add one last reason, and then we call it a day. Just one last reason, right? And the last reason that support and resistance does not work is that they are just psychological levels, right? Support and resistance are just psychological levels. They're just psychological levels, right? They are not actual levels. They're just psychological levels, right? They are just psychological levels, right? That's what it is. They're not real. Anything you see on chart is software. Your chart is just made up of softwares, right? This is just algorithms. They are not real, right? They're just things you see on the market, right? They're just psychological levels, right? They are levels that exist in your mind. You see that as support because you saw price bouncing off there. You saw it as a resistance because you saw price bouncing off there, but they are not real. Right? What do I mean by this? Look at the real charts now. Look at this. When the market comes in, look at this. They're not psychological levels. Right? Look at this now. Imagine that someone look at this flip zone now. What happened there? The market tested there, went up, gave rejection. Why didn't the market react here again? Look at this. It just broke very freely, right? Look at the same thing that happened there. This was an uptrend. Look at this. There was no rejection at all. The market just came and just broke through. No rejection, nothing. These are just psychological levels. They're levels that exist in your mind. You're seeing this as a resistance because the surprise make you think it is a resistance. So these are psychological levels. Trade with structure. Don't be trading with support and resistance, right? So this is how to trade and make money. Just see support and resistance as psychological levels, things that exist in your imaginations, right? You're seeing it and it looks like a support, it looks like a resistance. Meanwhile, these are just levels that can be broken at any time if the money pushed into the market is enough, or if the structure suggests that it should break. Right, as you can see, this market tapped into what a supply zone. I mean, a demand. Look at it. So it was a tap into a demand zone. And look at the demand zone. Look at after this. Look at this heavy buy. Right. Anybody that saw it, but man, this will get broken. Right. This is it. These are the reasons why the things don't work. Right. So in my mentorship program, I teach how to make these moves to your advantage. Right. I teach you how to make the best use of all this move. How do you make the best use of it? I cannot really share it with them because these are actually preview information that we share in our mentorship program, right? So if you want to be part of our mentorship program, do well to hit the link in the description, right? It goes for only $60. First thing, you have access to me. You will learn how we trade. We have intensive Zoom sessions, live sessions, and all of that. And also we have a Signal group to help you earn while you learn, right? The problem with many traders is that main traders, they prefer losing their money to the market instead of actually using that money to pay for knowledge and preserve it, right? The greatest investment that one can make is an investment into himself. So I see many traders blowing their accounts before they actually agree to come for mentorship, right? You said that has maybe $1,000, he would not just remove maybe $30 or $40 to go for mentorship. He would prefer to blow up the whole account before actually seeking help. It's when his account, his money is empty, he doesn't have anything in his account anymore. That is when he will not go for mentorship, right? But that is very, very wrong, right? That is very, very wrong, right? If you have an opportunity, please go for mentorship. And LNFS we're one of the best mentorship academies that you could find, right? So if you want to be part of us, just hit the link in the description. It goes for just $60 and it's a one-time fee, and you get access to how we trade it. And if you have not joined our Telegram community, our free Telegram channel, do well to join us. It gets our information, everything about us, and you get notified when we post new videos, right? So if you want a part of the mentorship program, hit the link in the description. It goes for just $60. $60 to change your trading career is not much of a deal. It's not much of a bad bargain, right? Have a wonderful day. We'll be having the page 2 of the diary of the sniper trader will be coming out, right? Maybe tomorrow, yeah, and we'll see you tomorrow, right? Have a wonderful day. Cheers.